Hello guys, this is George here. I hope you guys are doing amazing. I hope you've had a fantastic week, and that has been the first week of April. It has been a hell of a week since we had the Trump tariffs kick in, and yeah. But I hope you guys are doing okay and you've made money in the markets. Though I've had a lot of people complain that the markets have not really been so fair to them this particular week because of the tariffs and a lot of fundamentals that have kicked in. But that's not the point of this video. I want us to backtest on this video and see how to get entries mostly when you're trading order blocks. But as well, we are also going to be using knowledge from the Fibonacci tool, or how to use the Fibonacci retracement tool as well before we continue. So I had already started. By the way, I usually backtest 40 trades every single day. I backtest 20 setups in the morning and 20 setups in the evening on a pair that I will choose for myself. So you should do that as well, because backtesting helps you build your edge and gain confidence with your trading system. Anyway, let's dive right in. If you've not subscribed to my YouTube channel, I'd really appreciate it if you subscribe and also like this video so that next time you don't miss out when I post another educational video. Okay, you can as well join my free Telegram channel. The link is on the description if you haven't, and follow me on all social media platforms. The name is GeorgeFX Massage. So today we'll be backtesting our JPY on the 4 hours time frame, try and see if how to trade order blocks and how to use the Fibonacci retracement tool. So I'd already started and marked this as my OB already, because you can see here clearly we have a breakout structure there, which means after the breakout structure we mark the order block that led to that breakout structure right there. So it means ideally we will be expecting to see price drop to this particular order block and then stretch higher, or we take buys from this particular order block. So that's what we'll be expecting. So just watching. Yeah. Okay, yeah. So from the current price action, or from the price action we are looking at right now, ideally is we've created a new high. You know, this order block was only valid because this was our recent high. So it means that right now it's not invalid, it's still valid, but then now we have a new OB and this now becomes our extreme order block. Now the other second analogy that you can use is that I told you that anytime you see that there is a price accumulation around a particular zone, it means that there are orders around that point. So it means anytime market stretches past that point, most of the time price will come back to pick the orders that were remaining to continue buying. So it means ideally we will be looking at price dropping to around that particular accumulation, so which would mean that we'll mark now these last bearish candlestick that we're having here as our order block. Okay, so we'll be looking to take trades from here. Now we have two setups here. It means that number one, we have a possibility of price getting here and stretching higher, and number two, we have a possibility of price dropping further and taking orders from this particular zone. So it means that if this one is not able to hold prices, then this one will be able to hold prices for us. But now this becomes our closest order block, and we'll be likely taking orders from this particular zone. So then we'll play, try, and okay, that looks, don't know, I hope we don't create a new high. Yeah, so you can see price really got into our OB there, and you can see we have some positive reaction. So you would have taken your long position from here, and most of the time I've always encouraged you guys to take orders from the 50% of any particular order block. You'll have a stop loss slightly below that low. Make sure, by the way, you understand how to place your stop loss. You can be right on entry all the time, but you place your stop loss wrongly, so price takes out your stop loss first before it goes to your direction. So we will have targeted there, and that's giving us a 4.5 RR. So we'll wait, but still, whichever happens, even if price drops far, doesn't get to our entry and starts dropping, we'll use these now as our OB, as our extreme order block. Okay, yeah. So and yeah, so that's like just like that. You can see price has given us a very nice trade there. That's a 4.5, around a 4.5. So it means now this one becomes invalid ideally, because price has already reacted off this order block. But in the event that we see price searching below here, then we might be able to start looking for orders around that, or that order block that we've just left there. So here at this point, you'll just be watching prices, because there's nothing you can do. But as well, so first I want to see if price is doing us any reversal, and yeah, okay, cool. So ideally we haven't created any new highs. So in this particular case, you ideally where we're having our order block should be around here. The reason is there's an order block, a type of a demand zone that we call a rally based rally. It's a type of a demand zone. It usually has orders, and that's exactly what you're having in that particular point. So anytime at this point, most of the time there are orders that you're expecting to see price stretch to that point to take out orders from there. So ideally you might see price get to this point to take orders from here and continue stretching higher. The other thing we can use is a Fibonacci retracement tool. So you place your Fibonacci from the low to that particular high there. That's our highest point, and you'll be able to see that actually that the zone that we've marked is in between the 50% and the 78%. So I have mentioned this in the past, that any order block that you mark when you're using your Fibonacci should be in between the 50% and 78%. Ideally, when price goes past the 78%, then it means that that is actually not a retracement, and it might probably be a reversal. So you have to exit. So most of the time, if we were to take this trade, I'm not sure if price will get back here, but if we were to take that trade, it would mean that we'll have our orders there, and we are going to have to target that the 0%, and then we're going to have our stops at the 78% level, because I've told you ideally if price stretches below here, then it means that that is not a pullback or a retracement, and that might be a possible reversal. So you have to be careful in this particular case. Yeah, so you can see we're having some nice bullish momentum once price got there. So it means that now we would be targeting that high, and we'll be expecting to see price stretch even further past that high, because ideally you remember we were bullish. So I will shift to break even once price gets to this particular point. I will shift to break even, and now wait to see how the trade plays out. Okay, too much shaky. I honestly don't feel good for this one, but let's just chill. Ooh, yeah. So just exactly what I've said about stop losses. You see here we were almost getting sexually violated, but yeah, we were lucky on this one. But yeah, so that's it. So you see, having or knowing where to place your stop loss is very important, because you won't find yourself taking silly random trades, or market exiting at your stop before it's going to your entry. Okay, so right now I'm on break even because price has already traded above here, so whatever happens I won't lose shit, and we don't lose shit. Yes, that is it. You can see price has taken out the high, so we have made another 3.2%. So, and here we had made a 4.5%. So that's a 4.5, 3.2, that is a 7.8. Yeah, so then we're gonna also now chill and wait to see if we get a new OB in this particular case. Yeah, so let's wait and see here as well. I think the closest might have this can be a possible order block, this can be a possible order block, but ideally if we have these as our order block, so this is a possible order block, and then this is also a possible order block right here. So now what happens is we are just gonna take our fib, and then our fib is here, stretch it from the low to the high, and you can see that this order block is actually on the premiums side of the market. So it means we can't take a buy on a premium. We have to take on the discount, so which leaves us with this one. So we'll just relax and wait, see how price gets there and reacts of that particular zone. And yeah, so for this particular case as well, you can see how prices reacted off there, and I don't know, we're gonna check the high, and ideally that's a really long wait. Yeah, we've taken out the high, so you see that was also a good sorry, I didn't place the long position tool. I'm so sorry, guys. So I told you guys, take your orders from the 50% of your order blocks. You can have your stop loss here, but then common sense, I don't think this is a good place to have your stop loss. You can have it here, because you also aim in the market is also to minimize your risks as much as possible. So you can see that clearly give us a 3.8%. We already had a 7.8%, so that's giving us an 11.6 maybe. Yeah, just something around there. So we are so far 11.6% up. Yeah, so that's it. That's that has been a nice one. Yeah, but you can see we're incorporating the fib and it's really working so nice. So ideally, guys, you remember, you also don't forget that on the higher time frame we are very bullish. So this was our first breakout structure. This was our first breakout structure. So it means if that is our breakout structure, this can be our extreme order block at this particular point in the market. So we have an extreme order block here, and yeah, but then we are trading the internal structure, so might not see prices get to this point, but either way we don't know. So let's see if we contemplate or if we can see a pullback. And yeah, okay, and we've had that high, a new high has been created there. And yeah, so you can also see as well that we've had here a change of character, but this now I've told you these are internal structure, sorry, because this is the last low here, so it means this is an internal structure change of character. So you can have, maybe you might have small trades. Okay, that's nice. So we have had another, after that change of character, we've had a breaker structure here. So ideally it means that we can have an order block. So in this case, this can be our possible order block here. Yeah, that can be our okay. I don't know if that will work, but let's just see if the fib, what is the fib saying? That zone is in between our 50% and our 78%. So ideally it means we are valid, so we can take that particular order there. So yeah, so it means that now we'll have our short position tool there. And I told you guys you can have our stops at the 78%, but that's too tight. We can just stretch it a bit, and then we'll target this low, which is giving us a clear 3.6 RR. So that's not bad. That's not bad. So now we'll play our chart and see. Yeah. Oh, damn it. So yeah, we're out. Exactly. So you can see for that particular case, we've been sexually violated. Yeah, so it means that now we wait. So maybe price might be bullish for this particular case or something. Maybe this was a fake, but this was an internal change of character, so it's fake. So it's okay. And So yeah, let's just cool, chill, wait. Oh my god, price is not actually going to hit our internet. Damn, yeah. So yeah, so that's just it. So this is something I've been telling you about, the stop losses, like knowing where to place your stop loss. But this is not something to do with knowing where to place your stop loss. This is actually, maybe we marked a wrong order block. Maybe we marked a wrong order block, because internally we should have marked this one, maybe, because that's actually the last order block in that particular case, right? So we should have marked that and maybe taken our orders from here, and yeah, should have taken our orders from there and then still targeted that low. But either way, no problem, we made a loss, and it's okay. We've learned. Yeah, we've learned that we're supposed to take our orders from here. We're only supposed to take a retracement tool only when there is a reversal. Okay, yeah, for this particular case, you can see we got sexually violated before price went our direction, and it's still okay, no worries. We're just gonna relax, chill, and we are. Oh, yeah. So right there again, at our extreme OB, but I'm not liking the kind of momentum we're having towards the OB, but the kind of momentum we're having outside of the order block can be good. So we'll have a long tool there. So it means that we're gonna take that particular trade or that particular buy right there. Okay, yeah, we're gonna have that particular right there buy there, and we're going to target, because now this, you can see how the market structure is high. So this is our high, so you can target that high ideally, because you know, we are bullish, and then now this can be a possible swing setup that you will have. Then we'll target that high as just like that. So and then now, cool. So okay, we might do that, we might get here, but as well, don't forget that we're having these, there is a small order block here, but that is pushing prices lower, that's supposed to push prices, but I don't think if it will, it won't work, because that is an internal structure. Can't expect to have maybe a very small reaction and then price continues. Yeah, but then once price gets here, I will be on break even. So even if prices start recessing, I don't care. So for now, okay, okay. Yeah, cool. That was a nice one. Yeah. So you can see how price is stretching. So I would, at this point, I would shift my stop loss to break even. So if price trace, and I told you there might not, okay, there might not be a reaction. Yeah. So for that particular case, you can see that was actually a good swing. That was actually a good swing setup you would have right there. So, and price is stretched all the way to our take profit. Thank you very much. So yeah. This video is becoming long, so I'll have to stop here from here. So I have about 15 more setups to go. So yeah, I hope you guys have learned from this, maybe how to have your entries, maybe how to mark your OBs, how to use the Fibonacci. Maybe if you guys have a problem with how to use the Fibonacci retracement tool, you can comment on the comment section, then I'll see if I can do a video and explain to you guys how I personally use my Fibonacci retracement tool to maybe just ascertain my entries before I get in. But okay, you can see from 5 entries, you've had 1 loss that we've learned from, and we've had 4 wins that are actually good wins. You can see that's 6%, that's a 3.8%, that's a 3.2%, and that is a 4.47%. So here we lost a 1%. So that is, the 1% is insignificant in this particular case, because long term you will be in profits. Okay, yeah. So I hope you guys have learned from this. Make sure to like, follow, share, comment, subscribe on this YouTube channel. I'd really appreciate. You can also like this video and leave a comment of what you've learned or what you may want me to talk about on my next video. Okay. Okay, this has been George. I love you guys. Make sure to join my free Telegram channel as well. The link is on my bio. Yeah, if you have any question, drop in the comment section, or you can even text me. My number is also on the description. I love you guys. I will see you on my next video. Bingo.